Greetings. Welcome to the American Pacific Borate Webcast. It is now my pleasure to introduce your host, Michael Schellenberger, CEO. Thank you. You may begin.
Thank you very much. Appreciate the opportunity to speak to everyone today about American Pacific Borates Fort Cady Project. Before we begin, I hope that this finds everyone safe and healthy. I'm pleased to report that everyone within the American Pacific family is currently safe and healthy. So the timing on this is also very fortuitous. We have just released our enhanced DFS, and so this slide deck will be, quite honestly, some of the new findings associated with that EDF, or the enhanced DFS, or EDFS as we're calling it. Certainly, as I'm sure you have seen before on many of the other slides, we will be having forward-looking statements, so I would please ask that you use good judgment and that associated with that. So, number of slides we'll go through today, and certainly I think that we kick off probably with the highlights of this project. Associated with the enhanced DFS, you will see that we have markedly increased our NPV8. We are now almost $2 billion off the standard project with an IRR of almost 40%. EBITDA in full production is $438 million. Some of the things that we think are wonderful about the project are certainly the low upfront capex. The initial phase 1A project, this is a staged progression of projects, and there are several in the pipeline, but the phase 1A is a low capex, $50 million, and it generates an EBITDA of $20 million a year US for that $50 million investment. So it pays for itself inside of 3 years. Low technical risk, the ore body has been previously mined, and they have produced borates off of this ore body, so we think that that the technical risk is very low. Very high margin across the product streams, multiple revenue streams. Revenues are visible. We are targeting commencement of production in the latter half of 2021. Significant strategic value, multi-generational ore body with a life of over 20 years, and certainly globally significant in full production. So let's get started. With this slide, I think the most important bit on this slide is likely that we're just over 300 million shares fully diluted. The borates are in everyday living, and certainly borates define a number of minerals, and they're used in many of our everyday life options. They can be put into 3 broad categories: industrialization, food security, and then the electrification of transport. Production of borates, most of the borates occur in very specific places. You need to have volcanism as well as very dry climates. And the minerals that do produce borates are colemanite, borate, or borax, or tincal, and kernite ores. Fort Cady is a colemanite ore body. There is some production of borate from borate-rich brines. 80% of the world's supply comes from Turkey and California. And we can see across the demand for borates, the largest use of borates is for glass products, fiberglass, insulation, and glass itself. It's used in ceramics, and the third largest use of it is as a plant nutrition. The other portion of our project is with SOP. Sulfate of potash is a specialty fertilizer that combines both potassium and sulfur. It's applied to crops that are either sensitive to chlorides or plants such as potatoes, tobacco, avocados, berries, or it's used where the buildup of soil due to minimal rainfall is problematic, buildup of chloride soil. Production of SOP is typically generated from a Mannheim process, and that converts standard potash, or MOP, and adds sulfuric acid to that. You add heat to that, and you produce sulfate of potash, and you also, the Achilles heel to every Mannheim furnace is the production of HCl. Typically, the question is, what do you do with that HCl? Well, at Fort Cady, we have need for that HCl in that that is used as the lixiviant as part of the extraction of the borate ores. Compass Minerals is the only existing producer of SOP in the United States. The markets for SOP are, there's a growing demand in the United States. The current market's around 7 million tons. All of this is used in that specialty fertilizer that we spoke about. U.S. is a net importer of SOP with a 5% compounded growth rate. We are fortuitous in that we are located in California, and certainly the California market is a very large market, 120,000 tons a year. Compass Minerals is, as previously indicated, the only U.S. producer of SOP, and Compass Minerals produces, over the past years, their operating costs are about $630 a ton based on their financial statements. But there is sufficient increase in demand forecasted that American Pacific and Compass can jointly supply the North American market. With regard to borates, the size of the borate market is about 4.5 million tons a year. 20% of this market is for fertilizer. I indicated previously, fertilizer is the third largest use of borates. The second most applied micronutrient by value in North America is boron, so that is a growing demand there. The existing market is a duopoly, with Turkish government-owned Eddie Madden being the single largest producer, over 50% of the market, and Eddie Madden will continue to meet that demand. They're the only borate producer globally that seems to have additional capacity, at least meaningful additional capacity. As we look at Rio Tinto Borates, which is the majority of the U.S. production, it appears to be operating at full capacity based on their flat supply over the last 8 years. Fort Cady Mine is a very favorable location here in Southern California. As I indicated, it's close to the large growing regions in California, so both borates and with SOP. We are fortuitous as well in that over $60 million has been spent on the project to date. The mine had previously produced borates from 1997 to 2003, so we know that the technical risk associated with the project is very low. Enhanced DFS was completed in April of 2020 and shows exceptional financial metrics for especially starting with the low-cost $50 million operation, so that allows us to build the operation small and then continue to grow. We have logistics advantage in that we have rail, roads, power, and water into the project. It is a mining project and not an infrastructure project. And pathway from the starter project to an EBITDA in the first year of full production is over $400 million. Site location and proposed plant operations, certainly you can see we are located somewhat remotely. We are fully permitted for construction, and we are currently waiting on the final federal permit for operation. The products are generated from well-established processing methods, high-purity boric acid production, standard industrial chemical processing methods, including solvent extraction and crystallization. We will also have a zero liquid discharge circuit, so that means there are no tailings associated with the project. It also allows us to recoup the majority of the water, and certainly in the desert, water is a precious commodity. Processing optimization work was completed in 2019, and certainly the SOP production is very straightforward in that the over 50% of the world's SOP production occurs through the Mannheim process. Well understood off-the-shelf kit, and production of hydrochloric acid is then used in our boric acid mining. So essentially we inject a weak boric acid into the formation that comes from the SOP Mannheim operation, and we utilize that and purify that, and then upgrade the product going forward through crystallization and the solvent extraction. We bring in standard muriate of potash KCl, add sulfuric acid to that, add heat to that, and we produce the high-value specialty fertilizer SOP, as well as generate the HCl for the project. Our enhanced DFS that was submitted or released in April, certainly very strong financial metrics. See that the unlevered NPV 8, we've increased that. EBITDA also has grown to over 400 million a year. The Phase 1A capex, we increased from 6,000 short tons a year to 9,000 short tons a year in the boric acid, as well as production of 40,000 tons. So ultimately, we will have, and these are metric numbers, so SOP production, full production, is 400,000 tons at full production, and for boric acid is 450,000 short tons for boric acid as well. The enhanced DFS, we did a sensitivity analysis on this. If we look at the two major producers, as previously mentioned, Compass Minerals is the only producer of borates in the United States, and if we put in their price assumption based on their 5-year operating costs of $569 a metric ton, and then look at Rio Tinto's average cost of borate production at their Boron, California mine of $630, their cost of production at $633 a metric ton, you can see that the metrics still are very strong with this project, almost $1.4 billion with an IRR of 31.7%. We also have presented a accelerated case within the DFS where we would advance the project more quickly instead of the Phase 1A, Phase 1B, which is 90,000 tons of boric acid, 90,000 tons of boric acid, and an additional 40,000 tons of SOP. And then 270,000 short tons of SOP in Phase 2, and going to 240,000 short tons of SOP in Phase 2. We would have this at the accelerated case in that we would go directly from Phase 1A to Phase 2. And of course, the metrics improve on that cash flow. The enhanced DFS, the accelerated case, we just spoke to that. In the normal case with this, the NPV8 on that takes it to over $2 billion with a 39.6% IRR on there. Targeted OPEX in full production is a negative US almost $20 a ton of boric acid after the byproduct credits. Byproduct credits associated with that drive those costs down to a negative number. The project also has multiple revenue streams, and it is split across several different commodities. 54% of the revenues come from boric acid, 43% come from SOP, and almost 3% from the production of gypsum that occurs in the regeneration process, where we regenerate hydrochloric acid and precipitate gypsum. And that gypsum is used as a land amendment for growing regions as well. Potential upside as well, we are looking, and we've commissioned a university to look at premium specialty fertilizer mix of boron and SOP, similar to what Mosaic does with standard KCl and boron and production of Aspire. We think that the micronutrient market is pretty exciting as well, and from the Compass Minerals market growth assumptions, they show that the micronutrient compounded annual growth rate increases at 8.4%. So we think that this is a right-sized product, modest initial investment for that 9,000 short tons of boric acid that allows us to move forward, set up our sales and marketing for larger contracts as we moved into the next portion of that. And certainly this phased approach allows us a growth way to, as I mentioned, 450,000 short tons of boric acid and 400,000 tons of SO short tons. Globally significant partners, we currently have a strategic agreement with two Chinese majors, Sinochem and Sinomac, and as we move forward, we will now be prioritizing the U.S. market. Product mix, it's a complementary mix with a diversified revenue stream as well. Our first production is targeted for Q3 of 2021. We started construction in 2020 prior to the world changing. The enhanced DFS was released in April of 2021. We will continue with the detailed engineering and complete that in the first half of 2020, secure our final operating permit from the federal authorities in Q3 of 2020 is our expectation, complete our financing discussions, and then be in start construction or continue with our construction, and then in Q3 of 2021 we will begin our plant commissioning. So as previously mentioned, we think that the exceptional metrics out there for this ASX listed company, low upfront capital, low technical risk, high margins, multiple revenue streams, and multi-generational, and we will become a globally significant producer. And with that, I think we are approaching our time. So I would thank everyone for their time and their attention, and hope everyone stays safe and healthy. And thank you very much.
Thank you. This concludes today's webcast. You may disconnect at this time, and thank you for your participation.